So now, any questions anyone has, please feel free. And we would be definitely, wanting to take up as many questions you have. But any questions from anyone, please feel, put in the chat box. We do have a couple of minutes left. So any question which comes to your mind, please, feel free. Anything related to, the loans or the intangible or the DEMPE, or any specific, situation in your case, if you think will be applicable, for your uh, transaction or business arrangement, etc. Okay, I can see one question. So the question is from Miss Amrita. Yeah, thank you, Miss Amrita. So the question is, how often should we do the benchmarking analysis for short-term loans? Say a company advances loans 4 times in a year. Can one benchmarking suffice? So thank you, Amrita, for the question. So yeah, I mean, that's quite a relevant question because I'll just take a step back for non-financial kind of transactions involving sale, purchases, or services, etc. Uh, the requirement is that for in the first year, you have to do a benchmarking, and in the next two immediate years, if there are no changes, uh, you can do financial updates, right? So to answer your point, if the company is advancing loan 4 times in a year, even if it's 4 times in a year, right? At the end of the day, if the nature of the loan is broadly similar, right? I'm assuming if the nature is similar, because most of the time what we have seen is that the nature of the loan is for working capital, purposes, right? So if they are advancing loans 4 times in a year, cumulatively coming to the financial year, right? Uh, there are two ways. A, in transfer pricing, there are two kinds of exercises. One is known as a price setting, right? Price setting, and the second is price testing, right? Price testing. So price setting is towards more of the planning kind of situation, right? Wherein when you are entering into a new transaction, right, or you're anticipating a new transaction, uh, you can do a planning kind of a benchmarking, analysis, and that will form the basis for setting up the pricing policy for a transaction. So to answer your question, two solutions for a short-term loans in a year, right? 4 times in a year. Uh, Either if you are anticipating that, it's kind of, I am assuming it's kind of a quarterly based kind of a situation because you mentioned 4 times in a year, right? So if the company is aware that there will be 4 times, a loan which will be of a similar tenor, similar nature, you can do a price setting kind of a benchmarking analysis, which will form the basis for all those similar kind of, loans, and that should suffice. If that is not possible, uh, a price testing exercise at the end of the year towards all these 4 loans, again with similar kind of analysis, benchmarking, loan transaction analysis, can also be undertaken. Now the only difference is if two of the loans are different in nature and two of the other loans are different in nature, then unfortunately we need to do separate loan benchmarkings for the loans. So that's why the nature of the loan and the terms and conditions with the law, with the lender and the borrower are very important. If the all 4 loans are different absolutely in nature, one is for working capital, one is towards injection or towards providing assistance in terms of financial assistance to the related parties, then in that case, for depending upon the loan nature, 4 analysis has to be undertaken. But if they are all 4 are similar in nature, then one benchmarking will suffice. But uh, the main point here is also that this is to be done also annually, right? So for one financial year, the loan analysis has been done. In the next years, the updates still need to be done, right? So it's like 4 loans in one year, and then do the same kind of financial updates the next years, or just one loan in 1 year. So if there are one loan in 1 year, we just do the benchmarking and we do financial updates. If there are four loans in 1 year, if same kind of loans, then we do just one analysis. But if there are different loans, then different analysis has to be undertaken. Yeah. Okay. So coming to the second question, what I can see is from Janet. So yeah, hi Janet, thank you for your question. So the question is, with regards to intangible, if the cost incurred for maintenance, shouldn't it be treated as expenses? So thank you for the question. See, for the intangible, even if the cost is related to the maintenance, right, it will be a part of the overall profit and loss or a part of the expenditure. But at the same time, it's a value generating activity for the intangible assets. So accordingly, any kind of expense in transfer pricing, right? Whether it's a low value adding expense, a high value adding expense, or a plain vanilla expense, the entity incurring those expenses will have to be appropriately remunerated for that particular cost or expense item. So even if the expenses are towards the maintenance of the intangible, if it is enhancing the value of the intangible, then as per the law, the entity needs to be remunerated for that specific activity in the form of the DEMPE analysis. So that's why they have bifurcated the DEMPE in these kind of activities, so that each and every activity like protection or development would be on the high end, the maintenance could be on the lower end. Even if it is a low value adding activity, it needs to be remunerated appropriately from an overall transfer pricing perspective. Yes, it is an expense part, but from a cost based point of view, all the expenses related to any intangible asset or even for a tangible asset needs to be remunerated by way of an arm's length analysis. So it should not be that you incurred an expense, it enhanced the value, but you didn't get remunerated for that particular expense. Yeah. Okay. The third question is from Kenneth. So hi, Sahil, we have an intercompany loan arrangement with our entity in Indonesia. However, interest charges have been waived or the loan has been provided on an interest-free basis, considering that the company is currently loss-making and in its early stages of operations. So basically here is the interest, free kind of situation that uh, the company is considering a loss making, right? Can other receivables or advance payments made to an intercompany? Okay, so there are two elements. So the first point is that, uh, we have a group which has provided a loan to an Indonesia related party free of cost because it was in its early stages. So the first answer question to your answer is, Kenneth, that from an transfer pricing point of view, both OECD and the Singapore guidelines, uh, for an entity who is in the early stages of loss making, correct? There is a period or there is a commercial justification here that to support its business operations, initial years, right? But the initial year period, it would be 1 or 2 or maximum 3 years. Then interest free element is there, provided it can be supported that the entity is going to be in a profitable situation after a specific time period. So in this case, it's a time frame of 2 to 3 years, right? So that it means is that in the initial gestation years of 1 or 2 or 3 years maximum, the entity was being supported and not being charged because it was in a loss-making position. But the authorities will definitely ask for financial and future projections to see what will be the future profitability of the situation. So this thing is something which cannot be on a policy for a going forward basis. So if it is the case that if the entity is in a loss position for all the subsequent years, then in that case this can be questioned by the authorities, right? Because then they might ask for an interest rate to be applied even though if the company is in a loss position, right? But then in that case you might have to see other alternate avenues of injection of equity capital into the company, or depending upon the business scale and operations as to how any other cash payments can be made to the entity to support from its loss making position. So depending upon, how many years and what is the niche, what is the reason of providing an interest free loan, it depends into how many years it can be taken care of. But after a certain time period, an interest needs to be, benchmarked. But apparently, from this year onwards, as I mentioned earlier, interest free component has, been done away with, unless and until, that's the caveat which comes to the answer to your question, that if the taxpayer is able to prove the authorities that, what was the strong reason and why, it has to be give an evidence that the third parties also are doing the same thing. So that is the catch here. The reliable evidence has to be given to the authorities that even a third party will also be doing the same kind of thing, that if its entity is in loss position. So if you see, it's not that, to support the entity for a certain period of time it cannot be done, but it will all depend upon the acceptance from the authorities, because by right they have mentioned that it should not be a interest free loan arrangement. Yeah. The second question from Kenneth again is that, can other receivables or advance payments made to an intercompany entity be regarded as a loan? So advance payments or receivables to be treated as a loan will again depend on the three-step approach, which I just explained. That if, there is a component of the interest rate or no component, if there is a fixed repayment, if the enforcer or the lender has, the right to claw back the money from the borrower, then we will have to consider it as a loan. But if all of those elements are missing, then it will not be considered, as a loan. So any kind of, cash advance or a payment or a loan or a financial kind of, handshake also will have to be qualified from the three-step approach. And on the basis of that, we can definitely then conclude whether it's a loan transaction or any other form of transaction, which is not a loan transaction. Yeah. Any other questions from anyone? Okay, so I think we are just on time. It's just 1 minute in left. So anyway, if any one of you has any questions, after this webinar, please, feel free to reach out to myself or anyone, from our team, and we will be happy to take, all your questions and respond to them in a span of 2 days itself. Yeah. So thank you once again for all of you for taking out time. I hope this session was informative and helpful for all of you. You could take away some inputs and elements from this webinar. And for any further assistance, please, feel free to reach out to us. We will be sharing the slides also after the webinar. And for any further queries, please feel free to reach out to any one of us. Yeah. So thank you once again to all of you, and have a nice evening ahead. Thank you.